This is the Mooncast. Hey bro, I'm just trolling is something that will not just challenge your perspective, but also touch your heart and soul. It's a book that defies convention, blending art and literature into a thought-provoking masterpiece. A reflective piece of provocative art that tackles societal constructs from angles you've never considered. Hey bro, I'm just trolling delves into the very essence of our existence. It questions the technology that surrounds us, challenges our notions of beauty, stares unflinchingly into the eyes of death, and questions the boundaries of freedom. It scrutinized the educational system that molds our very future. This book is a journey, an exploration of shared human experience, and it's a work of art that refuses to be confined by tradition. It's a canvas painted with words, a melody of thought, and a testament to the power of creativity in a world dominated by algorithms and data. Visit moonboycapitalventures.com and get your hands on Hey Bro, I'm Just Trolling today. It's not just a book, it's a movement. Now let's jump back into the show. Welcome to the Mooncast. So today I want to try to help all the crypto newbies out there not get wrecked during this next bull run, right? So there's a lot of things to unravel, right? When it comes to the next bull market, there's a lot of things that you need to know. And I'm going to just start with first saying that you should definitely listen to people that have been in the market much longer than you. If you're just now getting in, this is a really good podcast to really showcase everything that you need to know. If you're just simply a newbie, have no idea what to do, how to do it, this is just a little bit of a great starting point for you to understand. You're still not late. You know, the market has pumped up some, but you're still not late. The bull market's going to last about 2 years. So until the end of 2025-ish. And so trust me when I tell you, you are not late, right? And another thing you should understand is everyone is a genius during the bull market. So maybe your friend might buy some random token and it goes up thousands of percents. That's some kind of shit coin or whatever. That doesn't mean that he's smart. It just means that he was at the right place at the right time and bought the right kind of hype, right? Because a lot of crypto is trading narratives. There is cool technology that's out in crypto, but unfortunately, the market kind of dictates what is priced higher than something else. That's why Dogecoin is still in the top 10 in terms of market capitalization, right? So you need to keep all these things in mind. Another thing that you need to note is that you need to have a take profit strategy, right? Which we're going to get into a little bit later. And a lot of people don't understand the importance of having in mind how you're going to take profits, how you're going to sell. Most people don't sell. They think the market's going to go up forever. They don't have a strategy. They don't have a tax optimizational strategy that they can leverage or they can use. You know, maybe they put in 100K and then their 100K goes into 200K or 300K or whatever, and they take profit super early. But then where they live, their taxable rate is around 40 to 50%. So let's say that out of that, if they have 100K and it goes up to 300K, they have 200K in profit. And then that means that, let's say, half of that profit gets taken from taxes. So they only end up making 100K off of that 100K they put in, whereas making 200K off of that 100K they put in. So just is a very simple example. So those are things that you need to keep in mind. First and foremost, before we start, one thing that's super important is security, right? So there is a really cool thing that you can do is instead of using I think it's Ledger, let me look real quick. It should be, ledger.com, right? Now, there's a lot of people that say, you know, Ledger's bad because, you know, they closed source the code and then they basically had the optionality to hold your seed phrase for you. So people are saying, are they storing your seed phrase, et cetera, and et cetera. I still use Ledger, but you should definitely get a hardware wallet if your portfolio is 5K and up. Get a hardware wallet. Safety is the most important thing. Spend the money for your security, because I'll tell you what happens in a lot of times in crypto is you'll have situations where you're using a software wallet and you think you're on a site that you think is an official site and it's not, And once you hit confirm on that site, when you connect your wallet, they drain your entire wallet, right? And you won't even know what just happened. And they can't do that. They can maybe get access to your wallet, but they can't drain your wallet if you have a two-factor authentication. That's what Ledger provides. It separates the public key and the private key, right? Now, I'm going to leave a link down below for anyone who's interested in Ledger, right? And you can use my link that's official so you don't get scammed again by using an unofficial link. And yeah, you can go ahead and check this out and you could set that up. And I do consultation, so I will leave my Calendly in the description too as well. If you need help setting up your Ledger device, or if you want to use other different hardware devices, there's different ones. There's ones that are cheaper, some that are a little bit more expensive. And you can see here the Ledger Nano S Plus is, this is in Bulgarian levs. So because I'm in Bulgaria, but anyways, they have different price points for each different one. They have the stacks it's out to as well. So depending on what area and what country you're in, the prices differ. And there's also Trezor, there's also Keystone, there's different types of wallets, but we won't get so much into that. And that's, again, for security, super important. Just wanted to touch on that before you start in crypto. If you want to deploy 5K up, I suggest you get a Ledger wallet. If you have less than 5K, you should be fine with a software wallet. Losing a few $1,000 is not going to kill you, right? But I really think for those who are more serious in trying to get gains, please use a Ledger or another hardware device so that if someone were even to penetrate your wallet, they can't take the crypto out unless they have your two-factor authentication with your Ledger, right? So moving on, you need to understand market cycles, right? Super important. So when you look here, we're on CoinMarketCap. I'm going to break down CoinMarketCap in a bit, but when you look at, let's go all. So there's market cycles, right? As you see, there's ebbs and flows within the market, right? If you look back here, this was the 2017-2018 cycle, right? Where Bitcoin went from, I think, like around $3,000 to $20,000, right? Something like that. And then the market dumps again. Then it goes cold into a bear market for about a year and a half or so. And sometimes even 2 years, right? And then the market pumps back up again, right? And then again, we go cold for about a year and a half, 2 years. And then we pump back up again. Why does this happen, right? Well, there's a couple events, right? One of them is the Bitcoin halving, right? So it's supposed to be around this time frame, right? April 19th, 2024 is when the halving is supposed to take place, right? And so, as you can see, here's a site that kind of showcases, it's telling you 141 days away and 11 hours, 11 minutes, 33 seconds, right? So you have about approximately 141 days for the Bitcoin halving. What does that mean? Bitcoin halving is when there's less supply within the market and the demand stays the same or increases. So why is there less supply? Because that is how the algorithm works with Bitcoin. Every 4 years, the supply that is able to be allocated to the miners decreases by half. So if you're good with economics, you understand if supply halves but demand stays the same, price goes up. If the demand increases, price goes up exponentially, right? So this is one of the catalysts that you need to watch out for, right? So you're still not late. You still have time, right? You see it says here 141 days. You still have time to allocate capital into the market before you miss the next tier of gains, because you've missed tier one of gains, right? Bitcoin's up over 100% year to date, right? I think at the lows it was 15K. I was encouraging clients to buy at 17K. That's when I was buying a lot of Bitcoin and a lot of altcoins around that range. So you want to accumulate at the lows. It sounds very simple, but a lot of people don't do it because they get scared. They get spooked out within the market, right? Now, another thing that you need to understand is the market trends, which we will get into, right? And we're going to get into market trends a bit later, right? I don't want to break that down right now, but narratives. I can't keep beating that down like a dead horse, right? You gotta understand the narratives within the crypto space. And the narratives are more important than the actual tech itself. So you might buy a token that has real utility, is even making real actual profit, but nobody cares, right? So you need to make people care. A lot of the market is driven by narrative and emotion. So understand that and don't get discouraged because you did your research actually, and you checked out the team, you checked out the value proposition of the project, you checked out the competition, you checked out the usability, the actual product itself, the community, all the different aspects that you were supposed to check out. And if you don't know how to dissect a project, I will be doing a podcast at some point showcasing how to dissect a project properly. If you guys don't know, I'm a venture capitalist. I've been in 6 different venture capital groups, so I look at a lot of pitch decks. I've looked over hundreds and hundreds of pitch decks, and invested in a lot of different projects. And so I'm very privy to what from venture capital groups. I'm very privy to what pitch decks are good and what pitch decks are bad, what white papers look good, what white papers look bad, and what's typically going to be a pump and dump scam, right? So you need to understand all these different elements when you're vetting these projects before you deploy capital into them, right? You got to do your own research, right? And again, another thing, don't listen to any YouTubers, including myself, And what I mean by that is, yes, you can pick their minds and see what and how they're looking at the market, but don't just buy a token because they bought it, because more than likely they bought before you, so they're handing their bags to you at a higher price, meaning you take a L, right? So don't be one of those people that go into the market, see some hyped up video that's, going viral, and then you think, okay, I definitely need to buy this coin because it's going viral, everyone's talking about it. It's probably because they bought before you, right? And so when you buy after them, the risk is higher that they're going to liquidate before you and you become their exit liquidity. Don't be their exit liquidity. A lot of these YouTubers, they get paid, right, from these projects for marketing purposes, right? So not only did they buy before you, they maybe even got equity from the actual project itself. So when the token pumps, they're able to dump the token, and plus maybe they also got on top of that actual payment for doing the videos, right? If you look at FTX even, for instance, right? That was a pump and dump token and a scam completely, right? Sam Bankman-Fried is going to jail. You had top YouTubers had a lot of credibility in the finance space, like Graham Stephan and Andre Jick. I think they were making upwards of $50,000 per month shilling FTX, if I'm not mistaken, right? And those aren't even crypto gurus, right? They're not crypto experts. They don't know more than me. Trust me, they don't, right? I've been in the market for almost 4 years now, and I'm now a mentor for the Stanford AI and Web3 Research Labs, and I've advised companies in the crypto space, and I'm also building my own blockchain company too as well. And so these guys they're not doing any of that, right? They're more into the TradeFi, traditional finance. They're not into DeFi, decentralized finance, and they don't understand all the different elements of crypto. They're not in this space. They're not well networked. You can check my LinkedIn. Everything is fully verified, right? So you shouldn't listen to, that's another thing. That's another top indicator, which I'll get into a little bit later. But when you think you don't know if it's time to sell around the top is when people like Graham Stephan and Andre Jick are shilling crypto super, super hard, because they're not really crypto guys, right? They maybe know a little bit about it. They maybe have some Bitcoin, have some Ethereum, but they don't understand all the different elements and verticals within crypto. They're not in the space fully. So keep that in mind with YouTubers shilling their bags and waiting for you to buy so they can dump on you, right? And another thing too, if you're new, stay away from degenerate yield farming, right? If you don't know what that is, great. Don't worry about it. You don't need yield farming to make massive gains. It's more for professionals, people that are seasoned, that understand what liquidity pools to go to, which ones are scam liquidity pools, which ones have a lower probability to get smart contract exploited, right? Because when the smart contract gets exploited, you're done, right? They're going to liquidate everything within the pool, and then you're left with nothing. So understand the counterparty risk when you're deploying your capital into decentralized exchanges to provide liquidity and earning yield. So that's another thing you need to understand, right? Another thing, don't chase pumps, right? Don't chase pumps. So what I mean by that is a token goes up 2x, 3x, 4x, whatever within a couple days. That's not the time to buy, right? That's the time to study. So, and also if you're chasing pumps, it means that you didn't buy your bags at the lows, right? You can't chase every single pump within crypto because everything's going to pump at different times and everyone's going to make money. What you're doing right now, why you're listening to this, is because you're trying to figure out what's going to pump more than something else, right? So you might buy a token today and it only does a 3x versus someone else's token does a 30x. Everything's going to make money, right? Doesn't really matter what you buy. It's going to at least double in price because the market just gets so bullish. People just buy whatever it hasn't pumped. So don't think that you're some kind of genius, like I said, because you made money. Everyone makes money during the bull market if you buy at the lows now, right? This is what I'm trying to tell you. So you shouldn't be chasing pumps. Unless you're, like I said, a very seasoned investor and you have a certain investment strategy, which again, I'll get into a little bit of the investment strategies that you can use, right? And there's different kinds of ones in which you can use. So please don't chase pumps. That's how you get wrecked. If something goes up 3, 4, 5x in a couple of days, a couple of weeks, please, that's not the time to buy it. Settle down, chill out. Wait, maybe there's a pullback. Probably there will be pullbacks for sure, like 10% pullbacks, maybe even 20% pullbacks, as during the bull run, last bull run, it was just happened just like that, 10 to 20% pullbacks before the next run up. And that'll be your time to maybe accumulate off of the pullback, right? Never buy on the pump, buy on the pullback when there's more fear within the market, which we'll get into the fear and greed indexes, right? And different tools you can use to gauge the market sentiments, right? So another thing I would suggest to do, which I did during the middle of the bull run, was I created a community, right? I have a research group with around 41 members, and we help each other keep track of the market. And I'm also in another research group that helps keep track, but they're more even catered towards a particular ecosystem, right? Cardano ecosystem. So, but with the research group I'm in, it's more generalized, just doesn't matter what project, less bias, and to help us keep up to date on our projects, right? So if you aren't in a community group, I suggest you join one. You can join mine, but it does cost now, sorry, but that's just what it is. There's no such thing as a free lunch. If you are interested in joining a group, you can contact me via Calendly. We can schedule an appointment and see where you're at and how I can further help you and get you into the group and all these different types of things. And we can discuss pricing and etc. Right? So, and yeah, again, the benefits of research group, right, is, like I said, they cover your blind spots, right? You're not going to be able to maybe keep track of all the different cryptos that you're invested in. I suggest you should stay 10 or less, right? If you're very new, you should not do more than 5 coins, right? If you're very, very new, buy 5 coins. That's all that you can be able to have the mental capacity to really track, right? If you're not seasoned, if you don't have systems in place, you don't have community groups to help keep your eyeballs on these things, if you don't know where to look for news, you should just stick to 5 coins or less. Especially if your portfolio is smaller, like 5K or less, even like 3 to 5 coins. You shouldn't be buying more than 3 to 5 coins. I will break that down a little bit when we get into like portfolio structuring here shortly, right? So another thing too as well is you need to don't invest like a stock market boomer, right? What do I mean by that? In the stock market, you're looking at price to earnings ratios, you're looking at quarterly reports, you're checking the balance sheets, you're super analyzing the stock. Don't do that with crypto, right? It just doesn't work. Throw all of that out of the window. In crypto, what you want to do is see what the narrative could potentially be and speculate on that narrative. It's a very speculative market, right? Unfortunately, we aren't at the stage yet where it's more about usability, about cash flow, about revenue generation, and these sorts of things, right? It's more about speculation, narrative, and the narrative drives the price. So please don't invest like a stock market boomer, right? Another thing, have a game plan and stick to your game plan. Whatever that is, write it. Like, it doesn't matter if you said, hey, I'm going to just buy Bitcoin and I'm going to wait till it hits like 100K and I'm going to sell. And if that's your game plan, then stick with it. If your game plan is something different, like, hey, I'm going to invest into these projects and I'm going to take profits. Again, we're going to get into these strategies of how you can take profits, but stick to your game plan, whatever it is. Stick to your narrative, wherever it is. You can't focus on every different narrative in crypto. There's so much narratives, from AI to storage, decentralized storage, to DeFi. You have NFTs. You have so many different gaming, there's so many different Gamblify, there's so many different narratives within crypto. Stick to the L2 narrative too as well. So stick to your narrative that you've investigated from your own knowledge, right? And if you need help in regards to what coins you can buy or portfolio structuring, again, like I said, I'll leave my Calendly down below. You can schedule an appointment with me. And yeah, we can see what we can do based off your portfolio and how much risk capital you're willing to put into the market. But you need to be very, very fast, because there's a lot of catalysts that are coming up, which again, I'm going to talk about a little bit later in this podcast, right? And yeah, so we're going to discuss now, before we get into the portfolios, right, and how you can optimize your portfolio depending on your portfolio size, because I've split it up into 100K, 50K, 20K, and 5K portfolios. Right? And what you can do. But before we get into that, let's look at helpful tools, right? So you see here, one of the most helpful tools that we have is coinmarketcap.com, right? That's coinmarketcap.com. Why is this tool helpful, right? If you're super new to crypto, this is where you need to go, where you need to index your data, find all the different information that you need. You see they have everything split up between AI and big data. You can see BRC20. If you don't know what that is, that's the Bitcoin tokens, right? And then here you see gaming. You have FTX bankruptcy, estate. You have all these different sort of things, right? And you can customize it. You see all the different categories. They have from sports. You could check, privacy tokens as well. Layer 2 narratives that you need to look into. Tron ecosystem, it goes on and on. Education, Solana ecosystem, Cardano ecosystem, Ethereum ecosystem, and so DeFi, so they have every single thing subcategorized for you, right? So when you go back, you can look, you see all the prices for everything. So if you don't understand all these different numbers that are here, you can see here is the price of Bitcoin, right? Of one Bitcoin. And for those who don't know, if you're super, super new to investing and stuff like that, and you want to get into crypto because of the asymmetric bet and the exponential rate of return that you can get, price, you just because it's $37,000 doesn't mean you can't buy it, that you have to buy a whole one. You can buy a fraction of one, right? If you don't understand that, right? You can buy a bit of it, $10 worth of it, $20 worth of it, $50 worth of it, right? And here is the 1% rate of return. Then there's a 24-hour percent gains or losses in this case, and then 7% gains or losses, right? Then here you have the market cap, right? So the circulating supply times the price gives you the market cap, right? That's how you get the market capitalization, and that's basically what Bitcoin is currently right now. And the projection is that this is going to go probably anywhere in the 2s to potentially 3 trillion in market capitalization, right? And so my estimate is we should have around an $8 to $10 trillion market cap at the peak bull, right? If Bitcoin gets, let's say, a 3 trillion market cap, usually it's around 30 to 40% dominance. Right now, you should be, the dominance is 52%. During the peak bull, all coins take over a little bit of the dominance, right? So Bitcoin drops to about 40%, maybe a little bit less, like 35 to 40%. So if you're doing that math, then at a 3 trillion market cap, then the market cap should be around 8 trillion, right? Which is a lot of liquidity inflows within the market, right? So another thing that you need to look at, so you can see, like I said, all the different coins that are here, right? Another thing you can check, let's just look, for instance, at Bitcoin. Just keep it simple right now. You can see the markets. You can check all the different DEXs and sexes that it's listed on, right? If you look at the DEX, Thorchain is at the top, so you can buy Bitcoin with in a decentralized exchange, right? And yeah, they have those there for you. But with the sexes, the number one obviously is Binance. They also have Coinbase, Kraken, KuCoin, etc. So if you don't know where to buy a particular coin, you can just check here, right? And you can know exactly where you can go to buy. They also have news as well, so you can always check the news, be up to date on the latest and greatest on the news, right, on what's going on. All of the information is here, completely free, guys, for you guys to check. And again, I'm just using Bitcoin as an example, so you can check any coin that you want to buy. You just search it up here, you know, and then you type it in, and then voila, you'll be able to be put into this sort of user interface where you can basically decide what all these different analytics and everything that you need to know, right, to basically analyze the token and so on, right? But this is a coin, not token, right? If you don't know the difference, just Google it. But so yeah, so it has all the different metrics here. You can see basically everything you need to know. If you want to see the all-time high and where it was at, it even shows you the time frame that it did hit its all-time high, right? Which is why I said approximately 2 years from now, we have 2 years roughly of bull run, right? Because the bull run technically started in 2019, right? And then it ended in 2021, right? And it was roughly around 2 years. So, and in the previous cycle, roughly around the same. So, yeah, this is where the previous all-time high is, right? And I have a rule that I don't think the bull run starts until Bitcoin crushes its previous all-time high from the previous bull run. So I don't even think the bull run, you're super still early, you know, because even here you still have another roughly around, Bitcoin probably do another 100% gain from this point here is what I'm estimating. I think the top is going to be somewhere around 150K, right? This is what I'm predicting, right? Because there's diminishing returns, and last cycle I think it did about a 3.5x, right, from 20K to almost 70K, so about a 3.5x. So the next diminishing returns from all-time high to all-time high, I'm thinking around a 2 to 2.5x, right? So you could see anywhere from 150K to 200K is what I'm thinking. Some people say less, some people say a bit more, but that's just my projections based off of that. And yeah, so this is basically all the different pieces of information you can check. You know, you can see the analytics as well. You know, they have many different analytics. You can see the whale holdings here, right? You can see the addresses by holdings, right? For people to have 1K to 100K percentages, people who have 0 to 1K in percentages, people who have over 100K worth of BTC. And you can see how that number is changing, you know, over the course of time. So it's a pretty cool analytics tool that you can use. And yeah, you can see the average transaction fees too as well. There's just a whole bunch of information here. And yeah, you go down here, it gives you a little bit of a description. And so yeah, that's pretty much how it works. And even here there's a little bit of a community tab too as well that you can tap into, see all the latest and greatest on the news, right? So that's basically CoinMarketCap, how it kind of works. Another thing I want to show you guys before we move on to the next thing too as well is where's that trending, right? So if you look here and you want to see kind of what's trending and you want to see more, you can just hit more and you can look and you can see that yeah, so you can see like all the different trending tokens. You know, you see what's pumping. You see Terra Luna Classics up 56% on the week, and you know, you see Nest Protocol, and yeah, so you can basically get an idea and depiction of okay, what's doing well, what's not doing well, why is it doing well, right? You can also check the see player 3 bull, I guess, games, right? So this one's also doing well as well. It's up in the last 30 days a 10x, right? So you can check this coin, right? And the market cap is still really, really, really small as well. So you can check these sort of elements and stuff and why these things are pumping. Another thing that you can look at too as well to see and check market sentiment and see where the market's going is you can look at lunacrush.com, right? Lunacrush.com is also really, really good. Again, I'm going to leave links down below for all this stuff for you guys too as well. So you can have a look and you can see all the top ranks in the interactions, right? is super important. And you can see based off of the interactions, you can see where these coins are listed at. You see Portal has a lot of social interactions, right? You see 28.43 million, right? And when you click the question mark, it tells you, right, interactions include many social driven engagements and include actions such as likes, comments, retweets, and upvotes. Activity is calculated on a rolling 24-hour time frame, right? So it's telling you what each thing means so you don't get confused. You can see the post that's happening, right? The topic rank and the alt rank, right? And so when you scroll down here, you see what's up and what people are talking about, right? Super important, especially if you are trying to figure out, okay, what token could potentially pump based off of the social engagement, everyone talking about it. You see Blocks is up there, Near Protocol is up there too as well. Yeah, so you can see Solana is up there too as well. Some of the stuff you see, Terra Classic USD is up there too as well. Oops, go back here. Whoops. Yeah, so again, this is a completely free tool that you can use. And yeah, so another thing that I think it could be super especially handy during the bull run, right? But yeah, it basically, you could scroll and play around with this. You see Casper's up there too as well. So look at the top 20 to top 50. You see Cardano's up there. See what people are engaging, what people are talking about. And then, yeah, Veracity is up there too as well. So yeah, and then go ahead and investigate those tokens. Like I said, I'm not going to do a breakdown fully on how to investigate if a token's a good match, not a good match. I may touch on it a little bit during this podcast, but yeah, for this particular video, we won't get too much into that. And yeah, so that's how you check that. Another thing that you can do is if you're into DeFi, right? If you get into decentralized finance, if you don't know what that is, that's perfectly fine. You can simply just go on a centralized exchange, buy a token, and just hold it. If you don't want, if you're scared of like self-custody, you don't want, hardware wallet, all those things, you can use a centralized exchange. I suggest not to, because I think a lot of these centralized exchanges, I don't know if they're going to be around moving forward. I just think that a lot, because if you see the situation right now with, FTX getting sent back and free, going to jail, FTX basically getting destroyed, then Binance now, CZ potentially going to jail, and also have them paying a $4.3 billion fine to the US, right? You see all these things, so I think DeFi is going to become more prevalent. Again, this is the narrative that I think is going to take place. And you have spot DeFi protocols, and then you have perpetuals. I think perpetuals is more lucrative to invest in this cycle, which I think is going to be potential really big narrative. Like if you look at like tokens like GMX on Ethereum, I think could be big. But anyways, this is DeFi Llama. And so for DeFi Llama, you can check basically all the top chains in terms of total value locked in those chains, right? And when you scroll down, you can see here clearly the TVL, right? If you don't want to look at the pie chart, you can see the top 10 to top 20 protocols, right? So you see here, you got Polygon, you got Arbitrum here. Tron is surprisingly number 2, only behind Ethereum. And then you have Bitcoin, Cardano here, and you have Thorchain, and so on and so forth. Multiverse X, ZK Sync Era 2 is here, and Sui Chain is here. Osmosis is there too as well in the top 20, top 25. And yeah, so let's see, for instance, if you're looking at let's say like an Ethereum, right? Just make it really, really simple for you guys. And so you see here the stablecoin market cap is 66.13 billion. So when you see this number start to decrease, right, it means that people are getting more into DeFi and they're unloading their stablecoin bags, meaning that they don't want stablecoins. They want to basically take advantage of the volatility to make exponential return, right? And so when you see that stablecoin amount start to decrease, that's an indicator that, hey, we're going really, really bullish here. And you see the stablecoin market cap start to drop. That's when you know, okay, we're extremely bullish, right? Yeah, so you can look at some of these chains and you can see like Lido, which is a liquid staking protocol for ETH. Maker, they have like stable coins like DAI that you can stake and earn yield, and you can borrow and you can lend, right? And then you have like Aave, but a lot of these are multi-chain too as well. As you see 13 chains for Curve, you have 10 chains for Aave, right? So yeah, it's another thing to really take into account as well. Yeah, and you can just scroll here. You can see basically the total value locked, and you can see the percentages change. The revenue that's being generated too as well, and in the last 24 hours, and then you can see the monthly average as well. Yeah, if you go to let's just say for instance let's say Aave. Let's look at Aave. You can see the total value that's locked here. And yeah, these are really good indicators that the protocol is more sturdy, more safe. It has a lot of liquidity, and it means that a lot of people trust the protocol, right? So you could see the borrowed amount here too as well, the fully diluted valuation, right? And then when you scroll down here, you can see development activities too as well, and yeah, the methodology, fees and revenue code is there. So all the basic information that you need is there. Why do I look at DeFi Llama? One of the reasons I like DeFi Llama is because you can basically kind of see what chains are most active in the DeFi sector, right? And those are chains you want to be looking at, not any of these poop layer one chains that no one knows about, no one talks about, right? You want to really be, looking into these sort of chains that are in the top 10, top 20, right? Because they're going to be, or top 25 is where I would say, for sure. So yeah, this is a really good indicator to show you the top layer 1, layer 2 chains that you play around with DeFi if you do decide to get into DeFi. Now, another thing that you can do is you can go to stakingrewards.com, right? Now, stakingrewards.com, you see here it has a lot of information, right? It has a global staking market, right? So it's around 141 billion. And you can see here too as well the net staking flow in the last 7 days, the global rewards per year, and the benchmark reward rate is around 5.95%, right? And you can see all the top protocols for staking, right? You see Ethereum's here, and I know it looks like a lot of information here, so I'm going to try to break this down for you guys, right? So you can see the market cap is here, right, of Ethereum, and the daily volume, right, is there for Ethereum, and the validators. So it's showing you the risk and the reward, right? So the inflation right now is at a negative 0.1%, right? And so the real rewards are around 4.71%. So this is the reward rate right here. And so this is the actual amount of rewards, but it's telling you that because Ethereum is deflationary right now, right? So it's basically telling you that there's more people that are trading on the chain. So how Ethereum works is basically the more that gets traded on the chain, a percentage gets burned, right? And so eventually when the demand increases for Ethereum, that percentage will increase of the burn. So the burn rate will increase, and then it will make Ethereum deflationary, right? And right now it's slightly deflationary. So you're actually getting the real rate of yields is actually 0.1% higher, right? And that's what that's basically trying to tell you. It's what's trying to break down for you, right? And it says the stake tokens trend, so meaning the amount of people, right, that are staking on the network within the last 24 hours increased by 1.18%, right? And it says the net staking flow in the last 24 hours in terms of money, right, is 26.08 million, right? And these are the amount of rewards per year, around 2.65 billion, right? So again, that's the reward rate that you should get, but again, because Ethereum's a little bit deflationary right now, you're actually getting a little bit higher yield. So that's actually very interesting, right? And so when you look at a lot of different protocols, like if you look at Solana, for instance, you can see the price, again, it shows you the staking ratio, right? Which is also important because I don't know if it showed it up here too as well, but I don't think so. Oh yeah, it's right here. So actually only 23.51% of people stake on Ethereum, which is actually super low percentage. And it's actually really risky because there could be an overhaul of the network, right? When it's not 60 to 70% and above, means that one whale can't buy up all the tokens and stake them and change the elements within the protocol. So it's a little bit risky, right? And when you look at Solana, right, you see that 70% of it is staked, right? Versus here, Cardano, it's around 65% of people are staking. And the reward rate 7% here, and it's 3.14%, right? And then so you can see that amount too as well. And yeah, basically all the same different things. So let's just click, I don't know, let's click at Cardano, for instance, right? Let's just have a look. So we can see, so when you scroll down here, we've already kind of touched on a lot of this stuff, right? So let's just scroll down. It shows the reward stability here too as well, right? So basically how stable and how safe these rewards are, right? And so it has a really good rating. The stake tokens, amount of stake tokens is 22.96 billion. And the circulating percentage is 96.99%, right? So Cardano's almost reached maximum amount of inflation, right? It should, I think, reach at the top of the decade, if I'm not mistaken, right? So there's not much left in terms of token inflation, which is great in terms of price appreciation long term. And I'm just giving you guys ideas of basically how to look at these things, right? And yeah, you can go here, you can see the price, also in retrospect, in inverse correlation with the staked ADA, right? And so yeah, and when you scroll down here, you can do, for instance, you can enter a dollar amount. Let's just say you want to stake $10,000 of Cardano, right? And you could see your earnings right here, right? Super, very, very simple, right? You can see how much you would make over a year, right? And that would be the amount that you would make. So it's not as lucrative as, let's say, if you go to like a Solana. Let's see, let's go to Solana real quick and let's have a look at Solana. So if you go to Solana and let's say you were going to do the same exact thing and you were going to put $10,000 into Solana, so you'd make double the amount on a 365-day earnings, right? And yeah, so staking earns you extra yield, and that's why I like it a lot. If you like to know how to stake, again, schedule an appointment with me via Calendly, and I can teach you how to stake your tokens to earn extra yield on them while you're just waiting, right? Once you've already got your nest egg and you're just waiting, why not earn some extra yield, right? And it's a safe way to get yield. Now, there's degenerate ways to get yield with DeFi, which I won't get into, especially because this is basically catered towards newbies, right? So if you are a newbie, then I'm not going to cater to DeFi, for this particular podcast, right? We won't get too much into that. And the final thing that I want you to look at, right, is the fear and greed index, right? Why is this important? This is important because it shows you when it's a good time to buy and when it's a good time to sell, right? So again, I'm going to leave links down below for this. We can see the alternative.me is a site that you can go to and you can check the fear and greed index, right, in crypto. And I typically only buy in this yellow to red, right, is what I'm looking to really accumulate a lot. And so this is, again, a really good indicator to look at. Very, very simple. You can scroll down and see all the different types of things that it's talking about. But for the most part, it's very, very simplified, right? And now let's get into the fun part, right? Which is, let's go. Yeah, here. So here's the fun part, right? So let's get into portfolio structuring. So I think if you haven't put any liquidity into the market and you're very, very new and you have a 100K portfolio, right? This is how I would structure it. I would do 50% into Bitcoin, right? And then I would do 40% into blue chips, right? And blue chips are your Solanas, your Cardanos, your Polygons, your Chainlinks, your Cosmos, these types of tokens, that have been around for a very long time, have a proven track record. They've been around for 6, 7, 8 years. I think Solana is fairly new, but I consider it a blue chip now. I think Solana's been around since 2020 or maybe 2019. But yeah, so these are where I would stock up on, right? And even you can look into layer twos, like I said, with Polygon. Yeah, I have a little bit of a layer two theory. I'll probably share with you guys a little bit later. But and then 10% into microcaps, right? Microcaps for me are coins under 100 million in market cap, right? So they're more risky, but there's different ways in which you can play that, right? You can look into the ecosystem of the bigger chains, right? So when you look at, let's say, like a Cardano, right? If you go to Cardano ecosystem, right? So ecosystem, let's see if it shows it. Yeah, it's not showing it here. Maybe I think on CoinGecko it should show it, right? So if we type in Cardano ecosystem on CoinGecko, which is another alternative. Yeah, there we go. It's another alternative to CoinMarketCap. I also think CoinGecko is really good. Yeah, so boom. And yeah, so when you see the Cardano ecosystem, you can see all the different tokens here. This is one I would definitely watch out for, World Mobile Token, because they're layer 2 for Cardano. And you see Cardano's a top 10 cryptocurrency, and their ranked right now is 444, right? 444 in terms of ranking. Why should you look out for this one? Because they're, one, a scaling solution. Two, they're solving, they're making a decentralized Wi-Fi protocol, right? And they're doing that in rural areas around the world, right? And so not only are they going to connect the unconnected, they're also going to be a layer 2 scaling solution for Cardano. And if you've seen what Polygon has done, you know, if we go and look, let's say right now it's a 61 million market cap, and if we go to cryptocurrencies, right, and we look at, let's say, a Polygon, that's the layer 2, the biggest layer 2 scaling solution for Ethereum, it's $7 billion currently right now, right? So can World Mobile Token do that? Yeah, absolutely. It could. In a bull market, I think there's going to be, first of all, Ethereum's going to hit $1 trillion in market cap. So I think the layer 1 competing smart contract protocols, you're going to see about 4 or 5 of them. They're going to hit between 100 to 250 billion in market capitalization, for sure. You know, so meaning that the layer 2 Polygon should probably do like a 10x from here. It's very, very feasible for it to be around a 70 billion in market cap. It does have a lot of competition, but this could easily 5 to 10x, no problem. Meaning that, you know, other competing layer 1s like a Cardano, even if it just does a 7x or so, or an 8x from here, it's easy for the underlying protocols underneath to easily, you know, or the side chains to do crazy amounts, right? So that's how I would play it, right? And so now here I've listed out a little bit of how I think it's gonna go, right? I think Bitcoin should do around a 5x from here, right? Roughly, for 3 to 5x. Let's say 3 to 5x, right? But most bullish scenario, 5x. So you're looking at on a 100K portfolio, 250K, right? So that's already putting you in profit, right? Off of just Bitcoin alone. This is why I say half into Bitcoin, because you ensure profits. There's always that risk that we could just have a Bitcoin bull run, or Bitcoin and ETH bull run, right? You don't want to take that risk. And also all coins, when you go further down the line, are extremely, extremely risky, right? But Bitcoin's pretty much a safe bet. It's going to do what it does. It's going to do around a 3 to 5x on the most peak, most bullish, I think, this cycle. I don't see it doing more than a 5x, right? So around 200K. That's the most bullish scenario. But I really actually think anywhere from like 120 to 150K is probably going to be the market top. Or that's when I plan to take a lot of heavy profits, which we'll get into again, take profit strategies a little bit later. And then you look at your blue chips, they should do around a 15x, right? For your portfolio in total, depending on what blue chips you buy, right? If you're looking at layer 2s, which aren't necessarily blue chips, but they're a little bit more established. You look at more mid caps, you know, not the micro caps, a little bit more established mid caps. And maybe you get a little bit more in the top 20, top 25. yeah, in average, you should do around a 15x. So that's 600K extra to your portfolio. And the micro caps should do on average around 25x or more. They could go absolutely nuts. Sometimes micro caps end up carrying your entire portfolio depending on which ones you buy and how you investigate. So that should do around 250K. So your total should be around 11x, about 1.1 million in terms of estimated, right? Amount of returns that you get, right? Around 11x is what you're looking at. So when we scroll down to the 50K portfolio, this is the one I like the most because I think this is the one you can play around with a lot more. I think it's the perfect balance of risk and reward. So I actually would go 55% BTC here. Yeah, and again, on a 5x on a 27.5K, you're looking at $137,000, right, on BTC. And then when you go to layer zeros, right, these are your chain links, your Stargates. There's a couple others too as well. There's Cosmos. There's Polkadot, which I think is pretty much dead. I wouldn't buy that one. And there's one more I'm missing too as well. But anyways, with these layer zeros, I think that these are going to have a narrative, right, for sure. And there's one that I'm missing. I can't think of off the top of my head, but these are ones you should definitely be looking at. I think you can split your entire portfolio on the 50K into layer twos. The reason I have a 50x here is because there's a couple layer twos that I'm looking at that could 50x to 100x, which is one of them is, again, the layer two solution for Cardano, which is World Mobile Token. Then another one is layer two on Bitcoin, which I think a lot of people aren't thinking about currently right now, which is like Mint Layer, right? Which is doing DeFi on Bitcoin. And they're launching their mainnet on the 29th strategically because I think they're anticipating that the Bitcoin spot ETFs are going to get approved in January. Could be. I think probably not. Maybe March is more reasonable. I think SEC is going to maybe push it back a little bit longer. But we'll see how that goes. But yeah, again, so layer twos, I think, are going to have a huge narrative. Why? Also because when you looked at last bull run, and this bull run is going to be even bigger than the last one, there are scaling issues with all the layer one protocols, literally all of them. I can't say a single one that doesn't have an issue, in my opinion. So in regards to scaling, what I mean by that is at a certain point, there's going to be too much transactional volume and it's going to overload the network, and the network is going to be extremely slow and it's going to get a little bit more expensive, right? With Bitcoin, I think transactions were costing around $30 around the peak bull. I think with ETH, it was like $50 to $200, something like that, something wild for each transaction. It was ridiculous, right? So people were moving to layer twos. Bitcoin didn't have layer twos at that particular point in time, but this time it will with Mint Layer. There's also stacks too as well. The thing I like about Mint Layer is that it's going to have atomic swaps, so you can actually you don't have to bridge your Bitcoin. You can use actual real Bitcoin, not a derivative of Bitcoin, right? A wrapped version of Bitcoin. And I think that's a really good solution to onboard a lot of people in Bitcoin who want to actively trade. And also if people want to start doing DeFi, Mint Layer is trying to build out a DeFi ecosystem too as well. So that's why I put a large bet on them too as well. Yeah. So another thing too as well for the 20K portfolio. So, let me break down again with the 50K portfolio. So again, say Bitcoin does a 5x from here, and you have, your 50K split up with 55% into Bitcoin. You're looking at about 137K. Then, like I said, your layer zeros should do about a 15x on a 12%, right? You put in, it's about 90K. And layer two narratives, you should do about 575K. And then you have your micro caps, right, that you play around with, and that should be around 112K, right? And this is subject to change. The microcaps might carry it. Layer twos might not do so well, depending on what microcaps you buy. So I'm thinking you could do easily around a 15 to 20x here. You should be looking about like around 900K on a 50K portfolio set. Sounds pretty crazy, but trust me, I've seen even more nuts things of people turning 20K into 5 million, in the crypto space, believe it or not. So I think this is actually pretty bearish, if I may say so myself. Now, with the 20K portfolio, I would split it up a little bit differently. How I would do it, I would do 40% into Bitcoin and ETH, right? And then I would do another 30% into blue chips and another 30% into microcaps. I would actually leverage more into microcaps. The reason is because you're gonna get profit, right? If you split it into Bitcoin, ETH, I would just do it all into Bitcoin because it doesn't really make sense. What ETH is gonna maybe outperform Bitcoin by an extra X. So let's say Bitcoin does a 5X, ETH maybe does a 6X, maybe 6.5, 6, 7X. So why take on the extra risk for just an extra 1X? It doesn't really make sense for me. So, but I just put the slash here for Bitcoin and ETH. So when you're looking at it, you can see here the blue chip projections, right? Too as well is you should be looking around a 10X here. So with the blue chips, they should do around 60K for you. So already that's 100K in total. And then the microcaps is where it carries you, and that gives you an extra 150K. So you should do around 250K on a 20K portfolio. That's more than doable. Trust me. You guys haven't been through a bull run. You don't understand how much these things pump. They go absolutely insane to astronomical numbers, right? So 250K, you should be your target for a 20K portfolio. Now, when we look at the 5K portfolio, what I would do is actually, with a 5K portfolio, I would actually decrease my Bitcoin holdings. Why? Because on a 5K portfolio, I need to risk more of my capital to get more of an exponential rate of return, right? So I would do 20% Bitcoin, meaning just 1K into Bitcoin. Then for the mid caps, I would do about 40%, right? So you're looking about 2K, right? For the mid caps, right? These are your top 75 to top 150 coins, something around here, right? Maybe stretching it to 200, top 75 to top 200, right? Coins. So you want to be bagging things around that range, and that should be able to get you a 15x, maybe even more. So already off of Bitcoin doing a 5x on 1K, that's 5K, so you get your money back. Mid caps, where you play around with, is where you take the higher risk for the higher return. So you could get maybe around a 30K return you can be expected. And then with the micro caps is where you degen another 2K in to micro caps, and you get around a 50K rate of return estimated. So that should be around a 17x with a 5K portfolio, which is more than doable. And you should be able to walk out with around 85K worth, right? Now, another thing too as well that you should note is the amount of coins which you're buying. When you're on a 100K portfolio, like I said, I just wouldn't buy. Actually, I think with all of them, I wouldn't buy more than 10 coins. But for sure, with the 20K and 5K portfolio, 20K portfolio, I wouldn't do more than seven or so coins. And with the 5K portfolio, I wouldn't buy more than 5 coins. 3 to 5 coins is what you should buy. So yeah, maybe you can get some BTC, get 1K worth of BTC. And then you can, for the extra 2K that you're splitting between the mid caps and the micro caps, you could do 2 mid caps and 2 micro caps, and that should be it. You shouldn't try to concentrate and overly spread. Don't chase pumps. Don't do any of that, and then ride that up. At minimum, you should do around 50K. You should do about a 10x, right? But most bullish scenario, I think you could get closer to 100K on a 5K portfolio. I know it sounds crazy, but it is possible, right? Another thing you should keep in mind is the trends, right? So when you're looking at the last cycle, what were the trends, right? What was trendy? So you had DeFi summer, right, in 2020. Then you had L1 season, right? So you had all the different competing layer ones trying to compete with Ethereum, right? You had meme coin season, right? Then you had DeFi 2.0 with like things like Time Wonderland. If you don't know what that is, then don't worry about it. But then you had Luna, with Do Kwon, and the 20% yield on UST, which ended up being a failure, but it worked out, and a lot of people did make a lot of money, but a lot of people lost a bunch of money. Then you had DApp season, you had NFT season, you had in gaming season too as well, right? Now, what I predict for this current cycle, right, in terms of predictions and trends, I think that gaming is again going to be huge, even bigger than it was last cycle. I think AI is a new player right now, a new trend that's going to be absolutely huge. Like, you should definitely allocate. I still haven't allocated into AI because I was concentrating more on layer 0, L2s, and Bitcoin. But I am going to, in the next month or two, going to be allocating more into mid and micro caps, right? Which I haven't done yet because I need to see what was going to survive and what was going to pump. That's why I think it's also another thing too. At the very, very lows, you shouldn't be buying anything but Bitcoin, right? Because you don't know which altcoins are going to survive for the next bull run. But now that I see which ones are pumping, which ones are still have life, which ones still have a community, which ones are still active, now I think it's a strategic time to place bets into mid caps and micro caps. Yeah, but in the beginning of the super, super lows, you should definitely just be allocating into blue chips and into Bitcoin, right? But yeah, I think AI is going to have a huge narrative. Bitcoin layer 2 is what I already previously talked about because of the reason of Bitcoin getting too expensive during peak bull run in terms of transactions and everything. Same with ETH layer 2, I think it's going to have a huge narrative. I think smart NFTs, people are talking about things like Altera are going to be huge, right? You should check that one out. Altera, ALU is the ticker symbol, right? And then you have DeFi 2.0, I think is going to also be huge. Again, you talk about perpetual swaps, which GMX, again, I think is going to be huge in DeFi 2.0. And there's going to be other people that are going to come up with other nuanced types of things. Kujira, I think, is another one to look out for. And dApps 2.0. So I think dApps built on top of layer 2 are going to have a narrative too as well, as people play with more layer 2 because it's just cheaper, faster, and more cost effective, right? So I think that will have a narrative. I think memes are also going to be huge. And actually, I also think GambleFi is also going to be another narrative that people, I think, aren't really talking about. If you look at things like Robit, who are generating, I think, $1 to $2 million a day in revenue, that's for sure going to have a huge narrative. People love to gamble. So I think that's also something to look out for too as well. So these are the ones I think are going to be the biggest narratives. There's other narratives that you can go and research yourself, but these are the ones I think are going to be the biggest narratives. Yeah. And so when you look at take profit strategies, right? Now, there's the 5-time 2020 strategy, which I like to call it's more conservative, where you're taking profits as the market is pumping. Every time Bitcoin does around a 30% move, you're taking 20% off of your portfolio. And so let's say from 40K on, Bitcoin maybe does, let's say 52K, right? And then after that, it does a 67K move, right? Then an 88K move, then 114K move, then 149K move, right? So you're looking at about 30% moves up on these targets right here. And this is around the time I think is going to be around the top, right? So you could take 20% of your portfolio each time that Bitcoin does that 30% move upwards, right? Now, the pros of that is you made it out in profit, right? That's a huge pro because you're going to be able to make profits doing this strategy. But I think the con would be you'll only be able to make around 50% of the gains you would have made if you would have tried the time close to the top, right? Yeah. And so this is a good strategy that you can use. You can take 20% every time a 30% move takes place with BTC. Another thing you can do is you can liquidate half of your BTC. You can liquidate half of your portfolio when BTC reaches its previous all-time high from the previous bull run, right? Which would be around that 68 to 70K range. And then you can liquidate the other half when you think it's close to the top. Then this is more advanced and it's moderately risky, right? And so let's say you liquidate, around half, around 70K, and you liquidate the other half around 140K, right? The pros is that you're going to secure by 70K. If you buy right now, you're at least going to do around a 5x in your portfolio. Like, it would be ludicrous if your portfolio, if you structure it the correct way, doesn't do around a 5x, right? It should be around that range, around the previous all-time high, right? And so you secure around a 5x in your portfolio, so that's bullish, but you won't maybe maximize your gains, right? Because you've already taken half, and then let's say the other half does a 5x, which is great. But imagine if you would have just rolled it all up, you would have made way more in percentage gains. So yeah, that's another risk to reward path that you can take. Another path you can take is you can liquidate everything when you think it's close to the top, and it's highly advanced and it's highly risky to do this, right? So you can liquidate, like I said, everything, right? But the pros are that you can maximize the gains, right? Even though it's highly risky and it's highly advanced, you can maximize the amount of gains you can make. The cons is the potential not to be able to time the top, right? Now, how do we time the top? Well, usually bull runs last around 18 months, right? From the halving, right? They usually last around 18 months. What I'm going to do is I plan to take profit around 12 months from the halving, right? I'm going to take profits much earlier and be happy with whatever happens with my bags from there. But Q1, Q2-ish, 2025 is when I plan to liquidate majority of my portfolio, if not all of it. So I'm going to get out earlier than most people, I think. Most people think it's probably going to be a super cycle, and you're going to hear this term super cycle come about again like it was last cycle to trick people into not taking profits. So that's what I plan to do, right? You can do whatever you want to do with your portfolio, but I'm thinking Q1 and early Q2 at the latest, right? Depending on the market sentiment and if I'm able to catch one last pump, right? I may stay on slightly longer, but I plan to take profits and I plan to diversify a little bit into real estate, right? This is what I plan to do. And I have a target in terms of the amount that I want to have. So once that target is reached, everything else is just, for me, it doesn't really matter, you know? So I'm not trying to get too greedy. The thing is, you shouldn't get too greedy, man. You should be happy with even a 3x. It takes people years to get a 3x, right, in their portfolio, whether that's stocks or on real estate or in bonds or whatever it is, right? Gold. It takes years, sometimes decades to get a 3x. So don't try to get too greedy is what I would say, and have a plan in place. Here are some top indicators to know when it's getting close to the top, right? So the Fed is starting to pivot with a QT strategy, right? So what I mean by that is quantitative tightening. If you don't know what that is, you can Google it. But basically, the Fed will start then increasing interest rates and making it more expensive to borrow money, right? And that's basically what you need to know. Another top indicator is your favorite influencers, celebrities are shilling crypto, right? So if you look at your Jake Pauls is dropping an NFT, Kim Kardashian is dropping a crypto, Ronaldo shilling Binance, you know, Steph Curry is shilling FTX, right? So things like this is really top indicators, you know. Again, your Graham Steffens, your Andre Jicks are starting. The people that are in TradeFi start talking about crypto. That's when you know it's time to start, liquidating, because that's your time, And another thing too, as well, is when your friends and family who know nothing about crypto are asking you about it and want to get in, right? Another top indicator, time for you to exit fast, liquidate, get out, So don't hesitate when these things start happening. When you're asking yourself, damn, should I get out? Those are indicators. You start to see, Dogecoin marketing everywhere. You start to see all these different types of crypto marketing everywhere. It's time to leave. It's time to exit the market. Now, when it comes to liquidity cycles, right? You need to understand the liquidity cycles, right? So how it always goes every single time, even now when you see this last run up with Bitcoin, every single time it's the same. Bitcoin will pump first, then Ethereum, followed by large caps, right? Always the same. Bitcoin, ETH, large caps, then the mid caps, right? Then the micro caps. What usually ends up happening is Bitcoin will pump, people will take profit from Bitcoin, move it into ETH and large caps, then take profit from there, moving into mid caps, and then take profit from there, moving into DJ and micro caps. Not everyone uses this type of strategy, but this is another strategy you could use. Like with your portfolios, if you scroll back up here, what you could do is just, let's say on a 5K portfolio, you could put 100% into Bitcoin, wait for it to pump 2x, take profit from Bitcoin, split it 2K into 5 different blue chips or altcoins, and then ride those up for another 5 to 10x. That's another strategy you could use. You could use. So that's basically the liquidity cycles, how they flow. So yeah, like I said, you shouldn't do this type of investing if you're not seasoned in the market, but it's another strategy you could use. If you don't have so much capital, you could leverage that strategy, but you need to know what you're doing. You need to understand which coins you want to buy. You need to have an entire game plan for this, right? Don't do this if you're not an expert, right? Don't do this if you've just gotten into the market. If you're 4 or 5 years in, then you're probably not watching this podcast, right? Or if you're longer in, then you're probably not watching this podcast. But if you're like a year or less in, year and a half in, maybe you should take a look at this, right? And listen to what I'm saying. Catalyst, right? So what are the catalysts that's going to help pump the market that you need to look at? You need to look at the spot Bitcoin ETF that's coming, right? We have the Bitcoin halving, which I talked to you about, that's coming. The Fed reversal on rate hikes, it's coming, right? The eventual rate hike because the banks are getting squeezed. You have the 2024 election, so the economy needs to be looking good and sitting pretty for those candidates to want to win, right? So these are the catalysts you need to look at for next year. And this is why the speculation is high. The market is going to pump and the cycles are going to repeat itself, right? So outliers that you need to look at that could be potential other catalysts are if Argentina or a few more other countries make Bitcoin legal tender. Definitely possible, right? More than possible. Highly probable, right? And more major conglomerates add BTC to the balance sheets outside of, MicroStrategy and Tesla. I think we're going to see a huge trend of more companies starting to realize they need to allocate Bitcoin to their portfolio, especially after the BlackRock ETF and gets approved with all the other ETFs to follow. I definitely think that that's two other catalysts that could help pump the market, right? That you need to look at. Now, I've already covered a little bit security, but again, use a hardware wallet if you're 5K plus in your portfolio. Check official websites when connecting to decentralized applications, right? There's no such thing as a free lunch. So if anyone is offering you something free, they're probably lying. And you're probably going to get wrecked because you're probably going to not know what you're doing, what you're getting yourself into, and you're probably going to get wrecked, right? So triple check if someone is trying to offer you something free, always. And disconnect from websites when you're done with them, right? You can disconnect with your software wallet. If you don't know how to use that, again, schedule an appointment with me and I can help you with that, right? Other tips. Okay. Follow credible people, but do not copy them. Again, right? Everyone's situation is different. Again, the people on the internet, they're telling you, hey, you should buy this. I put 20K into this. 20K for them may be your entire portfolio. 20K for them may be 5% of their portfolio, 2% of their portfolio. You have no idea how much liquidity they have. So don't try to think and basically compare yourself with other people, right? Everyone's portfolio and everyone's risk capital and the amount of percentage of risk that they're willing to take on is different. Some people have a high risk tolerance, some people have a low risk tolerance. Understand your risk tolerance, right? And then play your cards accordingly based off your risk tolerance. Then have realistic expectations, right? Don't think off a 1K portfolio that you're going to get $1 million off a 1K portfolio. It can happen. Some people put yellow it into a meme coin and it does 1,000x and they make $1 million. Great for them. That's not going to be you more than likely. That's a super, super improbable scenario, right? If you have $1,000, you probably shouldn't be in the market. I'd rather use that $1,000 to invest in consulting, coaching, or building skills to make more cash. You need to make money, right? Make more money, put money into the market. That's how you do it, right? Investing is for people who have money, excess cash to liquidate and put into markets, right? It's not for people who don't have any money, any excess cash. So a 5X is amazing, right? So it takes boomers decades to get that usually in their stock and real estate portfolios, like I previously mentioned, right? So keep that in mind. 5X is amazing, right? Don't get too greedy. You put 10K in, you got 50K, and you're feeling worried you don't know when to take profit. You're in profit by 40K. Just go ahead and take profit, man. Enjoy your gains. And then come back and do it again in the next cycle. Be patient. It's okay. make money through cash flow, but generate wealth through investing, right? And that's kind of how you do it. Don't chase pumps, right? Again, like I said, please, I harp on this so much. Do not chase pumps, please. That's how you get wrecked. You want to be wrecked capital, you want to be exit liquidity, by all means, chase pumps, chase the next shiny object, have the shiny object syndrome, get wrecked completely. But if you are patient, if you understand that, hey, a 5x is great, then you're going to be okay that someone else did a 20x. You should be happy for them, but it's already too late. The pump has already happened. Once something's already pumped up, it's too late. You've missed the pump. Especially during a bull market, it's not going to go back down that much in percentages. So don't chase pumps. And again, shiny object syndrome, don't have it. Be patient. That's how you get wrecked. For instance, Cardano pumped super late, in the last bull run. So be patient. You've done your research. Patiently wait. Maybe it's only on a 2x, whatever. Patiently wait and see what it does after that. But if it's getting towards that time that you have set in your mind for you to take profit, then go ahead and take profit. You've made money, move on. And actively learn. The space is constantly evolving, right? You want to always be actively learning and actively trying to figure out what's new, what's the new narrative, what's new technology is getting put out, and test the technology once it comes out. If there's something new, last cycle was NFTs became huge. In terms of, and then you could have made a bunch of money if you would have got in super early into some of these projects, right? So understand what the new technologies are, and then make your bets placed off of that, and then also try and test out the new technology. You don't have to purchase anything. Sometimes they just want you to test something for free. And another thing is do your own research, right? Again, you can pick my mind, pick other people's mind, but at the end of the day, you are responsible for your capital. Stop trying to blame other people for why you got wrecked. It's your fault. No one asked you to buy X. So if you get a Z result instead of a, X or a Y result, then it's your fault, if you don't get the result that you want. So do your own research. And remember, everyone is a genius in the bull run, right? Everybody's a genius. You're gonna think that everybody's making money. You're a genius. Everyone's a genius because it's the bull run. Right? Everyone's making money. There's a lot of liquidity inflows. So if you didn't make money, shame on you. But yeah, everyone's a genius in the bull run. So don't worry about that. And another thing too as well is be mindful for airdrops too as well. That's why I like the Cosmos ecosystem. It's one that I think is going to perform really well. And there's going to be probably some sleepers that are going to be airdropped to stakers of the Cosmos ecosystem. And just by staking Cosmos, you're able to potentially earn thousands and thousands of dollars from airdrops, right? So that's one way you can earn airdrops. Sometimes, I remember one time in the last bull run, just for joining a Discord, the members who joined a Discord got a free airdrop, and that airdrop ended up being worth 20K at the peak. So imagine, life-changing gains for some people, like if you live in like the Philippines or somewhere, you didn't even have to participate in crypto. Like you could just, all you had to do was just go on a Discord, and then you send them your wallet. You got free tokens, and those tokens end up being worth by around 20K, priced in from the market, right? So these are all the things you need to keep in mind. Yeah, so I hope this was a really good breakdown for you guys, and I hope you guys enjoyed this episode of the Mooncast, man, and peace.